Going live and direct. Hola, YouTube. Oh boy, SPY gonna give it to us. Alright, so we'll take a quick look at where PLTR can go. And that's quite the gap up. It's very loose. 1030 is the next resistance. Let's go a little further back. Alright, we got 1150. And we got 1420. Let me zoom into that candle. At 1430, okay. So if this then that, if we make a quick reversal here, or we get short squeezed, or a bunch of volume comes in, breaches that resistance here, which is at, well, the next high is going to be like 920. Set a pivot there. So this will be your key resistance here on the weekly chart. I'm going to set it there for a moment. I'll show you something real quick.
All right, we're breaking out. We're breaking out in here above yesterday's reversal pivot.
On the daily chart, we're about there on today's candle so far. So about 930 would be the resistance point that we need to break to resume a trend. And then your short-term target is going to be kind of twice. You get one here, about 958. And you get one here at about 1015. So let's make those kind of different colors because they're going to be on shorter time frames.
Micro double top on 10 seconds.
Say orange. So there's your quick dope for PLTR for price action. And we're looking for a hold here off of 860, which we're getting. Looks like our double bottom is complete. We're running on that trend up on top of the 8 period. When the 8 crosses the 20, you're going to see if this is going to resume a trend and eat this entire bar. So your key resistance for this pattern on the short term here for the 1 minute chart is right here. And it's happening faster than I can draw it. Dang it, get in there.
Look at that beautiful round bottom on PLTR right there.
It's glorious.
I mean, it can come back up to 920. Close that little breakout bar right there.
I like it. And it's like you say, that's one of the AI candidates to really benefit from it.
Yeah.
All right, so we got a nice clean rounding bottom here. IMGN's kind of threatening a breakdown. We got twin tweezer tops here, so be careful. And then also with SPY here, we're sitting with a bit of a pennant here, and it'll either pop or it'll drop. It's got to get through this little short liquidity zone to resume the trend up to the top of the big boy. But I think we're going to reject here and come back and test this 410.90 one more time, and that could be the final knock on that support. Alright, so I'm going to throw PLTR on my watch list. That's going to be a staple later on. Okay, so as far as finding easy targets on pretty much any penny stock, and you'll see this play into most large caps too, you just look left. I mean, it's really that simple. Pop up the weekly chart, find all your key levels, look for the tops of the big candles, and mark them out. And then you can go down, drill into the daily chart. You can find the big candles as well. Just mark your targets out, and you'll see that most of the time price kind of respects those areas and does something. It'll accumulate, or it'll become a resistance or a support point, whatever. All you need to know is where they are, because when you're trading momentum, you're trading a trend, you want to know where the stops are going to be, or where bag holders are going to be unloading their shares, so that you can get out of the way and not be the last one holding the bag. So when you're resuming a trend, you know there's a key target up here about 930. So if you break this resistance, you've got to try and respect this 930. If it can blast through it, cool, it can certainly go higher. But you're going to want to start taking some size off your position, or scaling a little bit, taking some profit, whatever you got to do to make sure you don't get trapped and you can maximize your profit in one way or another. There will be some shorter term targets too in play. I mean, whenever you have a big ass 1 minute candle like this, mark it out. Throw that on your daily chart so that you can see, or your day chart, so you can see where the target is if you break this this resistance at this reversal. That'll be relevant later on. I don't know why my drawing tools give me so many problems here. Like I said, I can't wait for TradingView. Get this done with. Here we go. Comes some volume. All right, SPY, what do you got for us? See if I can find a decent way to trade the volatility expected tomorrow on SPY. And I don't think we want to be messing below 405 for support on that. Holy crap, IMGN kind of consolidating here. PLTR, man, it's just playing right along that pivot. As soon as it breaks that, it's go time, but it can reject. Sometimes you'll get a bear flag out of this and it just breaks over. That happens too. Next support level down there is back at 860, so it can definitely hit that still. Yeah, I want to see the SpaceX IPO. That's what I want.
SpaceX?
Yeah, man. That's going to be something. All right, let's see if this pennant holds. Here's the 8 period and the 20 period. Kind of converging. If this candle can't break back above the 8 period, this can certainly rip down.
Whoa. What in the world?
Yeah, the pain zone's still kind of holding a $10 width on SPY. And on a day where you're expecting range, it'll kind of sit that way. It'll be $5 either side, and that's just too wide to run a strangle if you're going to run the conversion strategy. So this might be very similar to yesterday where we just kind of not take the trade unless you want to
So
do spreads.
if you look at the daily chart, right, we're hitting the 8 moving average,
Oh
8
yeah,
EMA. We're sitting right at the 8 EMA on the daily. So that's providing that support there.
IMGN's looking for a breakout here. It's going to be hard to see the control points in that, but I'll draw them out anyway.
I'm hungry.
Yeah, I'm getting snack hungry too. I've been up too early.
Yeah, I put a drawer in my wardrobe thing today now this week that has all this protein bars and granola bars and things.
The snack drawer.
Yeah.
Yep, I got one of
Snacks.
those.
My wife found it last week and she's like, aha,
Found your stash. Here we go, PLTR.
Once in a while I get a knock on the door. So I open it, she goes to the gets one out.
Nice.
I'm like, all right.
All right,
Well,
PLTR.
this
What are we
market's
gonna do?
gonna break up in a half hour. I gotta be on conference calls for 2 hours after that. So, something. So it will break out at 11:30. Well, there are auctions today, right? There's auctions at 11 and 1. So we might see a little movement, and we're 4 minutes away from the hourly. So let's look at how is the hourly chart doing right here.
That's a good idea.
Let's take a look at what are we doing on the hourly.
Well, 30-minute would be from
You
open.
are a doji on the hourly. Look at that.
Yeah, 30 minutes, one big long wick down.
Mm-hmm.
Yeah, we could threaten to close the gap on this little control zone here.
Well, I was looking at 41.51 on the ES if we decide to make a move to close the gap. I mean, it's not unrealistic that we go 20 points, right?
Mm-hmm.
Actually, the way that NQ is moving, if you look at NQ, I mean, this thing is just
There
out
we
of
go.
control.
Right up to that liquidity zone. Let's see where we go now. PLTR is kind of it's threatening to run out of gas here, but we know what happens when it coils up like that real tight. Pretty much any penny stock, when it accumulates for a while like that, you'll get a quick move. And the longer that accumulation takes, the bigger the move will be typically. It can go either way though. It's got a bar up or a bar down. So when you just basically take this bar for your range, it's roughly from here to here, the same as from here to here.
Yeah.
So if it breaks down from here, it'll go for a full bar straight to 860. If it goes up from here, it'll go a full bar up here to about 925.
I think PLTR is a type of stock that you should, every month put in like $100 in it. Dollar cost averaging.
I got a friend who has about 10 grand into IMGN over here.
Oh, look at that.
Not saying I would go and do that, but he bought it when the news was first coming out. All right, eating that entire liquidity zone. Bam, look at this. All right, 411.65 is your resistance.
What a change in the hourly candle from a doji
Right.
to
Big old
that
hammer.
beautiful, yeah, big old hammer.
I can see it
still
without
got-
looking at
still
it.
got 2 minutes. All right, we're hitting the 8 EMA on the hourly too. So that's, providing some resistance there. We hit it, we drop it. We hit it, we drop it.
Dude, these liquidity zones are just pay dirt, dude. When you've identified the range on those things, look how methodical that candle is. It fills it. Love that, dude. So now we've got a chance of accumulation, and either we get bar, spinner, bar outside of this liquidity zone, or we reject here and we get a 3 bar. So we've got about 22 seconds left on this candle. Let's see if we get a doji here, and if we get a 3 bar, we'll get a doji and then a bar returning to support. And then typically the bar after that will be very rapid. Oftentimes will wick up to about 85 to 95% of the previous bar. So if the third bar drops down here, the fourth bar will be a real quick retrace of that bar. The other scenario is we get a bar, a spinner, and a bar up. So we get a target here of about 1198, or 1198. Boom. Bar, spinner, bar. These are harder to predict. The only way you can see it is if this candle opening up above the body of this candle. So you get very short amount of time to try and trade that. Oftentimes people end up chasing these. Well, if you got long down here, you're okay with riding that to the top of the wick. You can set a limit order at the base target for bar, spinner, bar. So like if you have this range here, you can draw a box on it if you really need to. If you can. Box this thing, drag it up here, and the breakout above that target gives you a rough target for a quick scalp. You got to be nimble as hell to catch those though, and that wick will rarely touch the top of that box. Usually it'll stop a few cents short, and this one did indeed for 11.85. Doesn't mean it won't resume the trend because we can fill this. This is where a bunch of limit orders happened, so this was a breakout that failed. Doesn't mean it won't attempt it again. A couple bars later on a 1-minute chart, and you'll have an answer on whether we're going to resume a breakout and finish that zone, or if we're going to reject here and come back and test that 410.90 one more time. Being that we're light on news today, it's kind of likely to come back and test that 410.90 if it gets through this liquidity. So where do you take your trade? Well, unless you're running options, you really can't. You can go and scalp it on futures. You can short it if you want, but that's risky. So with options, you can kind of do a conversion strategy. You can start with a strangle if you wanted to, although today I probably wouldn't strangle because the range isn't expected to be that great. All right, there you go. PLTR finally melting across that resistance point. Get loose of that 1 minute 200 and we'll finish the gap to 925. There it goes. Good eye on PLTR, Ryan. Careful here. That candle stopped right at that 200. We can retrace back to the 8 period from here.
It was just too good to be true, that push on the SPY right there.
Yeah. Well, it's kind of typical actually. I mean, you get these really volatile candles like the solid bar, and you got to realize a lot of people are going to chase that. But then when you see where the limit orders are, Like if you're watching the depth of market on the futures, you'll probably see a ton of limit orders just stacked right in that area comparatively. And whenever you get a pop of volume of people buying that, it's not just retail chasing it. It's a lot of algos chasing it too. They'll pump it up.
Yeah.
So they'll keep chasing that ask, and they will meet it each time until they run the price up.
Look at that.
Here we go. Breaking back through liquidity. There's your 1 minute 200 for a quick stop. Watch for a little flash of green here.
We hit the top. We hit the top of the open range from today, from this RTH open range.
Boom, bip. We got a good chance of running back down to that 410.90, and if we smoke that, that'll be the third knock on it. We know what happens. We're kind of on the high side of the diamond pattern anyway, so there is very good chance of retracing this bar from Friday right here. Just have to wait and see.
Now look at that push.
PLTR looking to finish the move.
Exactly. That's a perfect Busby right there.
Yep. Boop, boop, boom.
Perfect Busby.
Quick day trade for a retrace. But check this out on the 5-second chart. You got your trend here. You got your 2-leg measured move. 50% retracement to the T. One and done. Very quick scalping. I might have enough range to figure out where the van lines are real quick. I'll start throwing those on. That's the only caveat of the fan lines that I draw, is that you need a little bit of consolidation range to figure out where they're at. So you got to wait a little while. You can find them in the pre-market. You can typically trade the open based on the pre-market fans. But on a day like today, where you're not expecting a trend day, where you're mostly expecting a range day, it'll be a little bit more tricky to trade those from the open. But like, you can go and figure out where this is wiggling in here and draw some fan lines, and you can figure out your opening range targets pretty quick. Just that they tend to be a little less reliable there, so I'd rather wait for the opening range to break through and then give us some trend or analysis that we can go and trade 1-for-1s later, because those base hits keep adding up. If you try and trade the opening range, you'd be liking yourself to swinging for the fences, whereas consistency is going to be key. So these little 1-for-1s that you can take all day long from there on out are going to be your much more lucrative play, and a lot less stress in dealing with having to get in and out of quick scalps on the opening range. All right, 1-for-1 bearish target met 11.20 for 11.21. Let's see if they resume here or if it pauses here. I'm thinking it'll pause here. Then we'll start to see some deviation plays. All right, PLTR just about to meet that target. Whoops, SPY's going to give us a deviation play. So I can go back to the root and start a line there.
Look at the head and shoulders. Bring it down your chart a little bit.
Yeah, up here.
There it is. Look at that head and shoulders.
Nice and clean.
Okay.
You got a 1-for-1 here, you got a 2-for-1 here. So if you went short on this break, you get twice the distance from here to here. Quick trade, but that's hard to call. If you look back, you'll see this accumulation here. Root goes right through it. So every time I explain these fan lines, like, they tend to start out the same way. You start with 2 lines, you just figure out where your key resistance and support was going into this. Line it up here. You get the diversion side of it. Doesn't matter where the root is. The root can be in space. Sometimes it'll settle on a couple candles. Most of the time it'll be in like nowhere. It'll be no land basically. but it's the shaft lines you want to follow because you can pick off your 1-for-1s very easy once you identify that range. And then 2-for-1s you'll get. They're harder to call, but you can get them. And that is like the easiest trades you can make, is those little scalps. Look at this PLTR right to it, man.
Yep, right there. I said it would hit. It would hit that breakout close right there. Boom.
Probably adjust the line just a little bit. There you go. Right to the top of that bar, dude.
We
Look at that.
missed about what, 2 cents?
Maybe.
Yep.
Yeah. About 2 cents. I was thinking 9.25, but that was kind of in the wick of this area. We could still push it, but I knew that it was likely to hit the top of that bar and then break over for at least a pullback. It doesn't have to fail there and reverse. It just kind of is an expected target, so a lot of people are going to start taking profit right at that expected target.
The people getting in right now are the ones who are, late to the game.
Right.
They came in. They're like, oh, it's positive. It's a positive day. Let's go.
Another thing that kind of plays into that is like when you get a move like that where it's got some volume in it, it pops up on scanners. And then when it does, it gets a lot of attention, and then people they jump the gun. They go, oh, that thing's hot. It's running on my scanner. They'll flip it open and look at the chart. Yeah, I'm bullish. Let's go. And they just dump a bunch of money in it and chase the ask. Kind of typical stuff.
Let me see. We're gonna go in and break above that. We're gonna hit 930.
There it goes.
That's
Sayonara. This is where it hits the scanners and people go following through, chasing the ask. Watch for volume, and this will take it parabolic. If it pushes this 930 zone, it'll go straight to 960 without much effort, really. Whoops. Didn't mean to do that. That's the other thing that's good about TradingView is it just fits the screen. You don't have to worry about it. This one, I get a minimize button, but no fit to screen button. So it's like I got to size it manually.
We are back into the open range.
All right, hitting the base of that deviation on SPY here. We're right at that 410.90, and guess what? We're cracking it. The third knock, man. So current pain zone is down to 405. It's a little bit narrower. It's like right at $9 wide, but only because the calls lost a little bit of value there in that push down. And it's funny on 0 days how easy it is to spot that pain zone. It's like you look at the options, you don't even have to look at the strikes. You just look at what the premium price is on puts and calls. And when they match around the $3 to $4 range, that's usually where your expected range is one deviation away or one strike away. So like where you see those, the strike next to them, close to the money, is where your actual pain range is. So people will tend to overpay for that next strike, and it will likely expire worthless, but sometimes price will come right up to those. And that's the whole point of looking at the 0 day strategy, so that you can go take very, very little risk into a strangle, and then all you need is one side to run or the other side to run in a trend, and then all of a sudden you can capture that profit by just selling the next strike. You don't have to care what the rest of it does. It can all expire worthless, and it probably will. Doesn't matter. You can capture that profit without day trading. All right, well, that was the third test on that 410.90.
We bounced.
We bounced, but that's not exactly bullish engulfing there.
That's right.
There's your doji. Let that sucker close. 5 seconds. Right under the 8 period. All right, we're going to get a bar spinner bar and push up to 411.20. Probably not. We're going to get a bar and a 3 bar right to that support again. Evening star print. This is where you have a high chance of trend right after this.
TPX. They were talking about TPX on CNBC this morning.
TPX?
Yeah, look at TPX. Did you bring back TPX?
Come on, break that 410.90. Let's go. I want to see that support fail and run right to that next liquidity zone.
It's gonna break out now. I gotta go use the boys' room.
I gotta get more coffee before it gets cold.
Yeah. Be back.
Come on, do it. Alright, it goes PLTR, attempting that 930 again. Got a bit of a pennant there, so it's kind of iffy on whether or not it'll push through. It's a higher chance of pushing through than rejecting here, but when you start to see this form like a little wedge here, you kind of get a little leery of whether or not that's going to give you a bullish 1-for-1 or not. Morning.
It sounds quiet in here.
Yeah, it's just expected to be a choppy range day. So I'm not too enthusiastic about trends. I'd love to see it crack this 410.90 and smoke all the way down to this other liquidity zone here. And basically retrace Friday's bar in this area. But alas, it keeps teasing that 411 or 410.90 area and bouncing off of it. So no trend day for the weary, I guess.
Yeah, I've just tried to scalp and it's gone against me twice. So I'm good. My pre-trading was pretty awesome, but it wasn't disciplined.
Yeah. Sometimes you just get kind of skunked on a day like that. When it's choppy like this and you don't have any genuine direction other than just sideways, well, trying to chase it around sideways can be challenging. Not to say you can't get, a bunch of little scalps in there. It's just a little bit harder to trade. So we inevitably got a bullish 1-for-1 back to this line here, but hard to read. If you look at the 1-minute chart, you got basically a double bottom here where this little doji was. But by the time you figured out what this was, because you were expecting a 3-bar here or an evening star, by the time you figured out what that was, it's hard to catch this guy. Once you did see it, though, you know where the first target is, 200. Bam.
Jeremy, did you does the fan line scalping strategy work in this market? Like just for tiny.
It can. You just got to be a little bit more picky with your setups. So like here we had a good one. We had a range test, bottom to top, through regression. So once this broke regression, that gave us a clean 2-for-1. 1-for-1 at least. So we got one here to here in a nice clean trend, and then when it resumed under the 8 period off of that bounce, the 2-for-1 finished down here.
But you're scalping on the 5-second chart there, aren't you?
Right. So I'd be scalping that on a 5-second. You can do that on a 1-minute. Let me get the crosshair synchronized here. You can do that on a 1 minute, but look at what you got. You got a big spinner up here in that liquidity zone. Drag this on for the top of this right here, right? So you got that spinner, that wick. That decline happened within a 1 minute candle up here. So as soon as we saw that close, sure, we could expect this to be a full bar down, which it got. And into the next bar, it resumed all the way down to the bottom of that bar. So if you're watching the 1 minute chart while I hover through this stuff, the trade was there. But how do you call this reversal on the 1 minute chart? You can't, because it's not one. You got a doji, and you got just basic sidewaysness through these three candles, and then you got a quick drop down, but it didn't really go anywhere. It just stayed in this range.
Yeah, that's what I'm finding. It's like I think, oh, scalp there, and it will.
It's just hard to capture this. It's hard to capture
Yeah.
this. This was easy, but you had to be picky to spot that, and you had to catch it in time.
Yeah, I think I'll set this one up.
It's just one of those days where it's going to be a little bit more challenging to get decent trades. You can really be stringent and be very picky and just wait patiently for a clean setup to appear. They will appear, and the fan line will show you where they're at. But you're not going to catch every single scalp. You're going to be missing quite a few. And for a good reason, because the risk on those is like, what are the chances of this falling through to do anything? Not really very high at all. So about the only thing I can be a little bit more positive of is I know if this 410.90 gets smoked, there's not much support all the way down to 409.25 here. So I've got a chance of capturing a trend day later on, but it's not likely until this choppy range breaks.
Yeah, I mean, I think as a beginner, the most important thing I can do is wait for the right setup, wait for the trend to present itself, and then go with it. But,
Exactly.
you know, we're trying to get into trades in chop like this. It's like surfing. You don't surf chop, do you?
Nope.
So, you know, it's just going to go against you. Well, it has 3 times now.
You're going to be paddling around, you're going to get really tired, and you're just not going to have a great time trying to surf chop. You're absolutely right. Whereas when you
Patience.
get those good waves, man, those waves will, I mean, they'll be elating. You will have this big grin. You'll see it's just easy and fun and enjoyable. Kind of the same thing.
Unless you're on the longboard.
Yeah. Then it's kind of like you can surf anything on a longboard.
That's a good analogy, though, because if you take longboard to times,
Do you surf, Victoria?
yeah, I surf.
Yeah. That's
We've got some good surf around here, but as you can
Oh, yeah.
imagine, it's just a lot colder than the US.
Yeah, that's for sure.
Where are you? If you don't mind.
South Wales, so it's like the west coast of the UK. So we get like an Atlantic swell coming in.
Oh yeah.
There's got to be some good waves there.
But
Definitely some colder water, though.
Yeah, it's nice. It's nice.
So I grew up surfing in the on the California, Southern California coast, and the water was never really all that warm. Occasionally, you get a couple days of water that would be around 70 in the summertime, like the dead of summer. But for the most part, it was like mid 60s. Get some great waves out there.
It'd have to be like 120 degrees out in order to get
Yeah.
no water.
Yep. But I noticed the moment I set foot in the Atlantic, though, I was like, man, this is like a heated pool. It was just wonderful. Waves weren't all that impressive, but the water was just great. So I think the East Coast would be a good longboard coast. All right, PLTR resuming that trip to 960, man, like clockwork. Every penny stock I've ever traded does exactly this, guys. It's so easy. Once you identify all those targets, man, it's just follow through from one to the other, one to the other. Keep moving. I call these the gravy trades. And like I always say, if you get skunked trading the EAS or SPY and you're just not having a good time with it, go scalp a penny stock. You'll feel good about yourself. This is surfing. Very nice. IMGN here, man, it's kind of STP in, but look for support around 1290. We might get another play out of this at about 1290. See what we end up with.
Watch for
PLTR
a
system.
market breakout in 6 minutes.
Got a meeting?
Yeah.
And it'll be 10:30 too, so we shall see.
I have back to back for the next hour. So,
Oh, that's rough.
you know, then I got an hour, then I got another back to back for an hour and a half. Lunch break. And then all the way up until 5. Yeah. I'm even thinking of taking a sick day tomorrow.
There you go.
So I can make up for not really done much yesterday and today, you know.
Playing hooky to go trade. I'm not gonna lie, I've done that before.
Just gonna take a sick day, make up for the week, and be done. You know.
I'm saving up my leave for when I'm trading real money and I can just take the after trade.
There you go. And if you plan
Yeah,
it around a
As well.
plan it around
I've
like
been-
an earnings event or something, usually have a good time.
You know, I've been in my company for 15 years, so I get 8 weeks of vacation, 3 weeks
Nice.
of sick leave, and something else, and mental break and all that. It's like
You're spoiled.
I've never,
Nice.
well, honestly, man, for a U.S. company, I've never seen that. You know,
No,
That's mad, yeah. That's a lot
Yeah.
of leave. Yes.
that's almost like working for an Italian company. Sorry, no offense.
You know, well, we've just expanded into 22 countries in Europe. So, and it's funny because we work with some people from Italy, Portugal, England, and it's like we get out of office messages from people saying, "I'm out for this whole month," you know, wait until I come back, kind of thing.
Nice.
Which is unheard of a U.S. approach, right? You don't do that in U.S. It's like in U.S. you got heart surgery at 9 a.m. and you're back online at 10:30. You know?
Right? Yeah. Or, you know, the boss could be sitting there reading your obituary and still ask if you're coming to work today.
Oh,
You
yeah.
know?
Oh, you're late. Where you been at?
All right. Be cautious here. Notice how I marked our fan line here as well, but I'm looking at this head and shoulders pattern right here, plain as day,
Yep.
and it's right under that liquidity zone.
It's gonna be a failed head and shoulder here, though.
Yeah, I think it can be because it's eating that liquidity.
Yep.
We're back to the old regression line here, and I haven't divided the upper range yet, so I'll wait and see. That candle's still got about 25 seconds to close, and if it closes a big fatty wick right here, I need the soundboard. Something along those lines. Or you could have it be the wop, 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 wah. Ah, man. So, apologies to the YouTube crowd. Yesterday, for some reason, the stream was recorded, but it did not go public. It was on listed, so I had to switch it to public. So if you want to catch yesterday, I did drop some knowledge in there. You know, go look in the live video section from yesterday. I changed it to public, so you guys can view it if you need to. Had some decent stuff come out yesterday. Ended up being kind of a day, kind of lackluster if we compare, you know. It's a little bit choppier, a little harder to trade, but we found some zones and we figured some stuff out. But towards the end of the day, it was neat to see it go right through that zone and back up, man. That was like a stop rate and a half right there. So some of the toots were a bit net long going into the overnight, but then now they're kind of changing their thoughts. So We just had this head and shoulders. That just about completes it. Let's see if it cracks that 1090 once and for all. Might get a trend day after all, but it might not be until the afternoon, so we shall see. Meanwhile, PLTR just playing one pivot to the next, price target after price target met. Eventually that trend will end, but I mean, you know, trade from one to the other. If you need to scale in and out of that thing on the pullbacks, dude, that's the right thing to do. It's just to be prudent. Never trust a parabolic move ever on anything. PLTR, it's starting to look a bit parabolic, so anytime you get those steep breakouts, just like the market doesn't trust it, you shouldn't either. So take your trades. You can scale in and out. Oftentimes what I can do is when I take a position in something like this, I'll take the bulk of my position across that resistance break, and I'll start loading up here, and you can see everybody else did too with those big bars. I'll load it there, go full size, and then I'll take and scale some off here and probably scale some off here. And essentially, by the time I've taken profit from those positions, I've taken enough of my position off to where all the profit balances my risk. So like if I made a bunch of money here, I will take off the position size to where it equals about what I have left in it, so that my cost basis is essentially zero on that move. So anything beyond here is just icing on the cake, so to speak. You're using a resumed position or a lot of your profit that you've taken from the position to leave a trade on if you're confident that this trend will continue for a while. Back in the days when you guys used to watch me trading dead cat bounces on penny stocks and stuff like that, it's exactly what I do. I take a big chunk and scale it out until my cost basis was like zero or close to it, and then I just let some profit ride on that. If it turned on me real quick, I just pull the trade off and close the whole position. No problem. Everything beyond where I scaled out is pure profit on top of profit, so zero risk. Or very low risk. All right, IMGN didn't quite make it down to this 1290, but we kind of stopped short right at about 13 bucks. Might get a reversal here to come and retrace some of this price action, so it's kind of choppy in the pre-market. Not one of my favorite types of charts to trade, but it's not impossible. Stick a line in here. Let me draw the darn line and then I'll adjust it. There we go. So there's your resistance point for this little double bottom. It's very small. Your target is going to be not all that great. You've got one here that just met. Anytime you have a reversal, you look left at the previous trend and you resume the fact that it's usually going to take these out in the same way it took them out on the bearish trend. So when you're looking for targets on these, it's pretty easy to just look left, find the big candles, trade from one to the other, just like we did with PLTR here. Same. See if I can zoom in on this enough to see it well. There we go. So boom, target one met. Looks like we're resuming. When you start to see dojis here, because this is low volume, be a little leery of it. There's a wick. Like, you can literally look at every penny stock out there. Anything that's trending in the news or trending in social media or whatever, when you see the price action, it's all the same. You just find your targets by looking left, figure out where the reversal is. You can look further left, find out where your key areas of support and resistance are. That's fine too. But knowing where they are is going to be 9/10 of your trade. And when you don't have anything, Like here we don't really have a lot except for pieces of price action that's happened before. You can see that on the weekly chart, looking way the hell to the left, we can see that these areas were important before. That's about all we got to go on. Other than that, we're so parabolic, it's like there's a level of psychosis in this candle that you can just see, right? Everybody and their mother got really hyperactive on that thing. So when you go back to the daily chart, it's going to take you a long time to find those areas. But if you know where the key support is, you'll be able to figure out where you could look for a trade later on in this thing. So if you've missed the bulk of the psychotic move, you can go trade the price action that took place within that move in previous time frames. So like here we have, there's a support area for this candle here. Looking a little closer, it was resistance. Looking a little closer, it was a range. So anytime you identify those, put them on your chart. And then all you got to do is trade from one to the other. So we're starting to see dojis of nervousness here. Market's not sure if it's going to finish this channel or this chart or this candle here for a range to range. That doesn't mean it's going to stop. Just if you've got long here and you still have some position on, be ready to bail if you see this thing break this support level. This was resistance, now it's support. It's looking a little more healthy. Damn, if SPY just doesn't keep testing that 410.90 over and over and over again. Oh, PLTR, be aware. That might be the sign to get the hell out, but the 20 period's here, so we'll zoom way in on this. We've got a nice clean measured move here that you zoom in on it, you can see it. There's one leg, there's two legs. Likely to 50% retracement here. And we'll set the bar on that. Hell, I don't really need to. I can just extend this one. Let that candle close on that 20 period. It's already going to do it anyway, but if it doesn't produce a big wick reaching under that 20 period when it closes, it will be a sell signal. And a lot of people will follow through with the trend all the way down to that 50% retracement around 920 to 925. Definitely expect a pause there at that 930 pivot though. If you get a morning star out of this where you get a bar, a spinner, and a bar, cool, we can continue this trend, but we're likely to hit that 50% retracement target, which is this guy here. Damn, 15 seconds and we might get a doji. When we see a bar and then a doji, you get three scenarios. You get a bar, spinner, bar, or a 3-bar, or you get a bar, spinner, bar, equal move down. And then the third scenario is you get a bar and then a hammer, or a bar, doji, hammer. So we got a morning star so far. So when you look at the Busby pattern, when you get the bar, spinner, bar, that it gives you the fourth bar to trade for range. Well, usually when it's an evening star, the fourth bar will be a quick bullish trade. When it's a morning star, the fourth bar will be a quick bearish trade. But in this case, we got another scenario where we get just a big old inverted hammer. So we got bar, spinner, started looking like a morning star and then became an inverted hammer. Well, you got to know one thing about that wick. Even on a 1 minute chart, that's a failed breakout. So there are limit orders sitting right in there. So what will happen is this fourth bar will be volatile. There's going to be a lot of limit orders still trying to get out at this price. So it's below ask right now, but the ask is going to be right here. And unless liquidity can chew through that ask and chase it up higher, this will be another failed breakout. But what this gives you is a universal zone or liquidity zone. So it'll either be a supply zone if price stays under it, or it'll be a demand zone if price breaks out above it. You could say the same about this wick. You could say the same about this wick. You could say the same about this wick and this wick. These wicks back here, anytime you see a wick, it is literally just a failed breakout. So a lot of limit orders took over. There were a lot of orders that changed hands very rapidly in that wick. So you can see the supply is feeding into the demand. Demand's taking the price lower. People are trying to get whatever they can for their long. Doesn't necessarily mean, you know, bears are short selling it. It means trend is going down. Son of a gun, we've reached next target on this thing. IMGN. Those big bars, man, they tell you everything you need to know about price targets. This is the kind of thing that makes day trading easy. And if you've got the experience to be behind it and know exactly what you're looking at, it's just that. It's just easy. You know, a lot of people will ask, well, if it's so easy, why doesn't everybody do it? Well, all of this chop is people trying to do it. They just don't have the patience to wait for the next candle to tell you what to do. So if this then that does not compute with them, it's like, oh, I'm losing money, sell. Or this isn't working, bad trade. No. They're not looking at it with enough time. They're over here trying to chase this on a 5-second chart maybe, who knows. They're looking at the order flow and being overwhelmed with information. Whatever it may be, it is an unnecessary waste of money to try and chase this price around until it breaks resistance. That's exactly what you're seeing here is waste. A lot of people are wasting time and then they give up. And then all of a sudden, trend takes over. Damn, we're building momentum. Well, next target right up here. Pivot line 413 or 1348. Easy stuff, guys. And it's like I said, if you're chasing this around and you're getting beat to hell in this, go scalp one of these. These are easy. All right. Well, still expecting more or less a range day for today. Nothing too exciting. Not a whole lot to drop in today's broadcast other than just simple price action stuff like every penny stock we've ever traded right there on those two charts to the right. Easy. If you traded one, you traded 1,000 of them. And they just get easier each time you do it. A lot of times if you fail to trade effectively in this kind of garbage, unless you're able to scalp these one-for-ones really methodically on that 5-second chart, this is where you're going to practice learning how to do this. And when you get this, this will start to make sense. Like you can still go and look at all the big bars in this little trend here and plot them out as targets if you wanted to. After a reversal, you can see, if I hover my cursor across the board here, you can see the line lines up with these bars. Look, first target met on the break right here. That bar, that's it. Pulled back, tested support, went to the second target. This bar. All the same stuff you're learning on penny stocks. When you got the fan lines in here, you can find the measured moves very easily. When you've got targets, you can have little scalps that you can make within that measured move. So you can take and trade every bar in this 5-second chart if you want. You can look at the quick one-for-one right out here. Trade just the break to the top. Sure, you can trend that. You can take this break here and run this 1-for-1. Well, this became a 2-for-1 because here was your first move. Leg and leg is 2-for-1. You got it twice here and once here. Identifying this can give you the 1-for-1, but when it came over and breached it and held support and resumed the move, being patient when it gave you a 2-for-1. Looking at the liquidity zone here, same thing. This is the liquidity zone, this whole area, right? That's these bars. Whatever you can use to identify ranges and zones, trends, targets, it's all at your disposal. Picking which one to use, that'll depend on the situation. It'll also depend on you. So if you like to trade these little 5-second charts, you don't necessarily need all these targets. You'd rather use liquidity zones. You know where all the liquidity is going to be by finding out where the limit orders are going to be. And it becomes supply and demand zones. Okay, trade from one to the other. Cool. Double bottom reversal? Why not? Right to liquidity. Trade that on a 1-minute chart? Fine. You can trade these 1-for-ones. You're better off doing it on a 5-second chart, but you can do it on the 1-minute and the 5-minute chart as well. So you got a 1-for-1 here. Got a double bottom here. You got a big bar here right to liquidity. You got a 1-for-1 through liquidity. It's all relevant in different time frames, but it all ends up being about the same price action. Your ability to trade it, that's the hard part. That's where you got to develop your trading plan. So your trading plan is literally a program. If this, then that. If this happens, I'm going to do that. Or if I'm in this situation or condition, then I'm going to exit if this happens, or I'm going to exit if this happens. I'm going to exit before this happens, or I'm going to exit after this happens. Whatever your plan may be, it's all written for you on the chart. You just got to make your plan based on what you're seeing. So here we're getting a bearish 1-for-1. Watch that 200 though, because it tends to be a moving pivot. You'll get a pause here. Not quite getting the follow through yet because we're also right at the bottom of the liquidity zone. Just wait. It's got to build some momentum to get through that 200. That's choppy. Got this nice little tweezer, bearish engulfing through the 200. Might be a sub-split here. So you can certainly throw another fan line in the mix there. Oops, that one's really wonky looking. Hammered off the 1 minute 200 here too, so 1 second left. Hammer closed. There's liquidity here to the 200 period. Bam. Might get a double bottom out of this. That's a liquidity zone on the 1 minute chart. So if you went short for the 1-for-1 here, this is your last chance to get out of this and wait for the next setup. It can resume, but it's got to break its support first. So you can sit here with your finger on a button and say, okay, well, if it doesn't resume and it does break back to resistance here, I can get out with a small gain. If it does resume here, I'll be ready to get out when it hits the bottom here anyway. All right, tested resistance. That iconic 200 period. Chopping, we're getting some accumulation in here. You can watch the short-term resistance line, it's right here. Breach that, you get a reversal and it goes back up to here. Bam. So if you didn't exit on that break, if you were short here, you missed your last chance back here. That was your signal. Well, I think this is going to be the rest of our day, unfortunately. Sideways and choppy. And it's about that time, so I'm going to go get that cup of coffee and maybe some breakfast. I've been fasting my breakfast lately.
All right, Jeremy, I'll see you tomorrow.
See you tomorrow, man. I wish there was
Take
better
care.
price action, but it is what it is.
Yeah, it is what it is. Take care, guys.
You too. I'll see you guys around.
See you.